Welcome to your monthly investor check-in. We're still working remotely, so we are still filming these here on Zoom. Today, I've got Brad from the investment team who's going to give us an update. Brad, we've just heard that the UK economy shrank by more than 20% in April. Now, we were expecting a fall in economic growth because of the coronavirus, but even so, this is pretty bad, right?
Yes, pretty bad, but as you say, expected. It's very important to remember that the economic picture will remain very unclear for some time yet. There are two key uncertainties. Firstly, how much permanent damage has been done by the shutdown, and secondly, whether any possible second round infection phase will be as disruptive as the first. Now, against these negatives is the counterweight of unprecedented monetary and fiscal policy response. That's not just true for the UK, but for every developed economy. Policymakers are doing whatever it takes to offset the shocks. Now, it's also worth pointing out that while many businesses are struggling, retail, hospitality especially, many others have discovered new ways of working from home, deploying new technologies, and these may have very positive long-term income effects. So it's definitely not all bad news.
So some positive news there, that's good to hear. Now, what about the global picture? What's your view on what's happening internationally?
Well, we're most worried about the emerging markets complex, and that's because developing economies have less ability to deal with COVID-19, but also because the global trade system has very likely changed forever. Supply chains are becoming more localized, and then there is a China-US friction currently playing out. We need to watch the US-China relationship very carefully, but we also need to recognize that the changes happening to global supply chains began way back in the financial crisis of 2008, 2009. They are not new. In terms of our view on the US, it continues to be positive because it really does have the most flexibility on the policies, and its economy is the most adaptable of them all. So it should rebound well. However, given a massive policy response in other countries, it's no longer a one-horse race like it was last year. We think Europe and Japan are now well placed to recover also.
Thanks. Now, about Brexit, the UK has just confirmed that it won't seek an extension to the transitional period. So what does that mean? What can we expect?
Well, it's a brave person who offers an opinion on how Brexit will turn out. We remain underweight UK assets because of the risks. Michael Gove has ruled out an extension beyond 2020, and our base case is that the UK walks away without an agreement. The EU and the UK then begin to trade on WTO terms, so World Trade Organization terms, rather than under free trade. This would be a major shock to Europe as well as the UK, because UK is the EU's second largest economy. We should note, however, and we should not rule out a last-minute EU compromise. Indeed, the atmosphere around the talks seems to be changing, even this week, with Prime Minister Johnson's renewed willingness to aim for a deal by end July, rather than the previous June deadline. On the EU side, they think any deal by late October would leave enough time to be ratified by the 26 parliaments.
Okay, thank you very much, Brad. And thank you to you for tuning in. We're really happy to see so many of you watching these updates each month. If you have any questions for us, please either contact our customer support team or leave a comment in the comments section below. Thanks once again for watching.